You open the mailbox and see a letter from your bank. It's your mortgage renewal notice. You open it and your stomach drops. Your monthly payment is going up, not by a little, but by hundreds, maybe even over $1,000 more every month. That's money you weren't planning to spend. And in 2026, this is happening to millions of Canadian families. Payments that felt comfortable just a few years ago suddenly feel heavy. So in this video, we're going to break this down in a simple way. What's happening, why it's happening, and most importantly, what you can actually do about it. My name is Sai, and I spend an unreasonable amount of time looking at housing data, interest rates, and how money actually behaves in Canada so you don't have to. A few years ago, specifically 2021 and 2022, mortgage rates were at historic lows. A lot of Canadians locked in 3 to 5 year terms with rates as low as 2 to 2.5%. Life was comfortable. Monthly payments were manageable. Fast forward to 2026, those terms are ending, and when they renew, the cost jumps. This is the mortgage renewal cliff. And here's what most people underestimate. The biggest mistake isn't the higher payment, it's waiting too long to deal with it. Let's make this real. Sarah and David from Mississauga took a mortgage in 2021, paying about $3,400 a month. Life was comfortable. They could save, go out occasionally, and still feel in control. Then 2026 comes. Their renewal letter arrives, and their new payment is close to $4,900 a month. That's an extra $1,500 every month. Same house, same mortgage, completely different pressure. Carlos, a single dad in Vancouver, took his mortgage in 2022, paying about $1,800 a month. After renewal, that jumps to about $2,200 a month. That's an extra $400 every month, or nearly $5,000 a year. Amir and Fatima in Calgary took their mortgage in 2021. They were paying about $2,500 per month, and now it jumps to $3,500 per month. That's $1,000 more every month. For them, that meant cutting back on travel, slowing down savings, and rethinking how they spend every dollar. If you're watching this and your renewal is coming up soon, pause for a second and think about your number. What would an extra $300, $500, or $1,500 a month look like in your budget? Here's what all these examples show. Looking for options matters. How you handle your renewal can either protect your money or quietly cost you thousands. Meet Jason from Brampton. He took his mortgage in 2021. His renewal comes in 2026. The bank sends him an offer, he thinks this seems fine, and signs it. No comparison, no negotiation. Let's say his mortgage is $600,000, and he signs a rate just 0.5% higher than what he could have gotten elsewhere. Over a typical 5-year term, that small 0.5% difference could cost him roughly $15,000 to $20,000 extra in interest, all for doing nothing. Now let's look at Priya from Toronto. Same situation, she took her mortgage in 2022. Instead of signing right away, she shops around, talks to a broker, gets a couple of quotes, finds a rate 0.25% lower than her bank's offer. That small difference could save her around $7,000 to $10,000 over 5 years. If the difference is 0.5% lower, that's $15,000 to $20,000 saved. Even small differences in mortgage rates matter a lot, and taking a bit of action now can protect thousands over time. So what can you actually do? Start by reviewing your current mortgage. Check your interest rate, remaining balance, and term. Understand if it's fixed or variable, and if there are any prepayment penalties. Also, think about your financial goals. Are you trying to pay off faster, or do you need more flexibility? Because your mortgage should work for your life, not against it. Once you understand your mortgage, the next step is shopping around. Don't just automatically renew with your bank. Check rates from other banks, credit unions, and online lenders. Even a small difference, 0.25% or 0.5%, can save thousands over the term. And if you get other offers, that's the perfect moment to negotiate with your current lender. Tell them, I've received a better offer elsewhere. What can you do to keep me? You might get a lower rate, reduced fees, or more flexible terms. Some lenders even have loyalty programs to reward long-term clients. Next, consider changing your mortgage type if it makes sense. Switching from fixed to variable could save money if rates are expected to drop. Switching from variable to fixed can give you stability if rates are rising. Choose the option that matches your comfort level and plans for the next few years. You can also look at prepayment options. If your mortgage allows it, increase lump sum payments or boost regular payments. Even small extra payments now reduce total interest and shorten your mortgage term. Step back and look at your overall financial picture. Factor in your income, debt, and savings goals. A renewal is a chance to adjust your mortgage to fit your lifestyle. Maybe you need more flexibility for kids, renovations, or other big expenses. Some lenders even allow you to lock in a rate early. If rates are rising, locking in can protect you. If rates might drop, a short-term variable could make sense. And don't underestimate professional advice. A mortgage broker can quickly compare dozens of options. A financial advisor can help align your mortgage strategy with your long-term goals. Now, here's the reality check for some families. Not everyone can comfortably cover the new renewal, and that's okay. Sometimes the best move is to slow down and give yourself breathing space. Look at your options. Maybe downsizing or renting for a short period can reduce pressure. A home is supposed to give you peace, not constant stress. If your monthly payments are creating strain, it's time to revisit your plans before things get worse. Remember, it's always better to act before a power of sale notice ever hits your door. Take control. Your financial future is in your hands, and the only way to make the best decision is to understand your situation and act proactively. Mortgage renewal shock is real in 2026, but what matters more is how you respond. The difference between doing nothing and taking thoughtful action could be thousands of dollars saved and months or years of peace of mind. Remember, a home is more than just a financial commitment. It's where your life happens. Take care of your money, but also take care of yourself. If your mortgage is renewing soon, drop a comment with the year. I'd love to hear how people are preparing or if you're feeling the pressure right now. I'm Sai. I'll see you in the next one.